It's 2 months old, but that's what we have. It was so exciting to finally have the data, right? Well, it's kind of the last clear data ahead of the shutdown, right? So, and already you see a pickup in the unemployment rate. Even before the shutdown is probably going to affect the data on the private jobs, right? We will probably also see a pickup in the unemployment rate, given that a lot of federal government employees are rolling off from the payroll in October. So that's a signal that the risks to the labor side of the dual mandate for the Fed are actually rising. So to me, the market reaction yesterday makes a lot of sense with the odds of a cut rising, right? But I think it's still very undecided territory. There's a lot of discussion about, payrolls itself. The headline reading was pretty solid. So whatever you want to make of it.
I have a follow-up on this unemployment rate, though, going up second month in a row, right? Well, we're talking about September now to 4.4%, highest in 4 years. But what do you make of some people going, but wait a minute, it rose for the right, quote unquote, right reasons? Because workers who were on the sidelines came back in and were actively looking for work. And I guess that's when you're considered unemployed, right? Is when you're actively looking for work. You're part of that survey. What do you make of that?
I agree that, unemployment rate rising because people cannot find jobs and they're looking is better than outright layoffs. But, permanent layoffs also increased in the report yesterday. So again, there's a lot of mixed signals there. And yes, the unemployment rate increase since it troughed back in 2023 has been driven by long-term unemployment, people not able to find jobs. At the end of the day, whatever the reason is, the increase in the unemployment rate is a bad thing. And if anything, it increases the risks that things could deteriorate. So I think it's still unclear what's going to happen on December 10th.
Yelena, is there an unemployment rate? Is there a headline rate that the Fed says, oh boy, we got to do something here in terms of maybe getting a little bit more aggressive? Is there a rate out there that they think is a trigger rate?
Well, they do have a summer of economic projections, right? So I'd say that should be our goal in terms of seeing what they think is bad and good. And if unemployment rate continues to rise, and probably in October and November it will rise for the reasons that I mentioned, that would go above their projection of what they see as a predicament for 3 rate cuts this year. So that should be our guide, I think. But in terms of like an absolute value, there is no such thing. It depends on the supply side.
Right. Now, as we start to get more economic data, we're going to start to get reports where the government shutdown, you can really see it play out in the numbers. My question is, how much should we hang our hat on those numbers because the government shutdown was just a moment in time and now it's over?
Well, you have federal government employees leaving for all kinds of different reasons. Are they going to be able to find a job that easily in the private sector when the hiring rate is so low? So yes, okay, I understand the shutdown is over. I don't think that the rebound will be,
okay, you don't think it'll be really quick. You don't think it's going to be a full one. So you think we're going to take a big hit to GDP because this was the 43-day shutdown?
We estimate half a percentage point in Q4. So it's lower than, say, CBO's estimate. We still have some time in the fourth quarter to recuperate some losses. So probably half a percentage point, which is significant by historical standards.
So it appears in this labor market, there's some layoffs, but there's not like mass layoffs, but there's certainly not big hiring out there. Is that a typical environment for a labor market where they're not letting people go, but they're not hiring them?
It's quite typical for when the economy is kind of at a full employment. So, it's a good spot to be. It doesn't mean that things are deteriorating, but it's a risky situation because, what's the next step for a company if you need to cut costs? If something, happens, some exogenous shock happens, you don't have that cushion when you can kind of like slow down your hiring to cut costs. The next step is layoffs if something happens. But so far, it's been relatively healthy.
Were there any signs in this jobs report that raised inflation flags for you? I know wages went up, not by a lot, and is it keeping up with inflation? I don't think so.
It's still elevated. It's
okay.
still elevated, but it takes time. And I always look at Atlanta Fed numbers, job switches, job stayers. There's no big margin between those two right now. So to me, it says that labor market wage inflation is subsiding. So it should not be a big source of inflation going forward, which actually Chair Powell mentioned a few times.